This is just Amazon on Thursday, March 26th, 2020. And I'm looking at the daily. I just want to kind of start with where we were yesterday, mainly pointing out that we had a hammer and the next day a candle that was lower, and a hammer with the next day, bearish candle lower, and, same thing. So we did this. A few different places. Where was the other one? There was like four through here. That was an inverted hammer, I think. Okay, I'm not remembering. There's like five of them here. Okay, this one, hammer and a bearish candle. Each time it went lower after this, lower, lower. Today did something different. It actually gapped up. So that's the first signal that, okay, something different is happening. So let's jump to the 5 minute. Look at what happened. If the program will switch to the 5 minute. There we go. Okay, looking at the 5 minute. So we gapped up. We had that push lower. Got to close way down here. Looked like we were taking out some lows. We're going to aim lower. And then today we gapped up, actually opened up really right at the 1900 support zone. And so even though we took it out yesterday in the last 5 minute candle, that whole area is really held today. We didn't even get a close down here today at all. We just had lower wicks. And actually, if you look at the lows, so from here to here is higher low, and then a higher low, and a higher low, and a higher low, and higher lows. And then you also had higher high, a high, a higher high, a higher high barely, a higher high, a higher high, higher. So you had all day long higher lows and higher highs. And it just started to move bullish. Look where we moved into. On the daily, we're right into our channel, and you're right at this like 1957, 1956 price. So 1956.49, 1950, 1955, 1957, 1940. Oh, that was lower. And then there's another wick up over here, right at 1960. So if we can get a gap up tomorrow into the 1960s, it's going to trap all these bears. It's going to be a bullish retest gap. Watch for it to pull back a little bit, even a single small 5 minute candle or a 3 minute candle that's bearish, and then go bullish after that candle. I mean, it's setting up to do that. If we get a high wave candle like this, like this candle. Oh, and how, while I'm back over here, how cool is it that we just continued this channel here and it crossed through it right here at 1900, that range, and then got right back up into it from below over here. I just think that's really cool. All right, enough of that. If we get this kind of a candle on Friday, go bullish above it. Nice high wave bearish candle from a gap up. So let me say that again. If we gap up into like 1960, which, isn't even on the chart. So if we can gap up to like 1960 up over here, and we get a high wave candle like this, anywhere up in here, or a little bit of a pullback down, go bullish above it. I mean, it looks great. You're clicking the buttons, but do the setup, get in above, stop below, and look to do that with an option that is at the money, out of the money. To do a $100 risk, you're going to have to be out of the money at open. Those just move a lot. So like the call today moved, this is the 1950 call. This had a range of almost $6. So that's a lot right at open. Over the next 25 minutes, it went sideways. Got a really nice hammer here. How about the 850 candle? What was that doing? 850 candle. Okay, this one was under $3, but still, good range on that. But this started to kind of establish a base here, and it was holding this base around $8 throughout the morning, and then into the afternoon, it pulled down a bit further. And so this actually looked like it could go lower. That was wrong way. That was when it hit 1925 and then was rolling back down. And there were some bears getting in here looking for this to go down. And it wasn't even getting quite down to 1900. So yet another signal. Here's a really nice hammer. Great signals that, okay, it's just going to continue to hold this, making higher lows. And like I said yesterday, actually the last 2 days, we just were kind of jogging back and forth between these levels. So this is a really nice consolidation all through here, really nice basing, and we got a bit of a breakout. If we gap up, look for that kind of candle. If we open inside again, look for that kind of candle again, that, to still retest and to rest a little bit. It just won't be as strong. So you're going to want to watch for that kind of candle, wait a little bit longer, wait maybe 20 minutes, half an hour into the market, wait and see if it's going to do something, just because that's what happened today. It opened inside of the prior day and took a little longer to get going. Could totally happen like that again. We'll look for some consolidation, look for a base, and the out of the money options, they're trying to go to zero. So if you're seeing a good candle, like back in here, you see a really nice hammer right at 12:30. Okay, right at 12:30, you could have waited from 12:30 another half an hour to 1 o'clock, and then it actually put in a nice low, just because the premium is getting sucked out of the options. So from here, half an hour later here, the option was actually a better price, even though it went up. It was because it went sideways, and of when it was on a Thursday. All right. So I hope that helps to kind of figure out what option to look for. But if you get a great hammer like that, like this is a great hammer. You could have entered this like 8x7, that kind of a setup, 8x7. But because it's not bouncing off of a support here, you want to wait a little bit. And I've seen these that you can wait about half an hour or so and get a better entry, or kind of get that confirmation. And I don't like using that word, but you can check the value of this if you wait half an hour and say, okay, what did that do on the option? Oh, it went lower. All right, well, how much lower? What can I get a better price for? Because we're all trying to get a better price. Now, the low it put in over here, very similar to the low it opened with. It just took longer to get there. So the low over here was about $6. The low over here was $6.30, $6.50. You just had to wait longer. But I would rather get in here 7x6, then get in here 7x6 and say, yes, I got the low, but then have to wait all day for it to have a bigger move. I would have been getting out for a smaller gain. I would have been getting out for a smaller gain like here, up here. Why up there? It was starting to make a higher high above a wick, and I probably would have miscalculated what this 1925 target was just because I did that earlier in the week. Let's see. Yeah, it got back up to this price here. So around 14. You've doubled if you're in 7x6 up to 14. No, I probably would have been looking for like 17 again, probably, for me. And then would have been bummed that I didn't get it. Would have tightened up my stop to like 10 or 9 and been stopped out or trailed out over here. Probably would have happened. But if you had just waited to get in until later, you got a lot of just this that's showing you, okay, it's going bullish. It's going in the bullish direction. It just needed some more time to rest. You could even do like a smaller, you could probably even do like a smaller uptrend channel here and grab this. But anyway, so that's the calls. The puts were losing value all day long. They were trying to hold a base here right at 10, like 10 by 9. And then it moved a little bit lower and got below 9. And like I said, just continued going down. So just didn't see as much, even with the 1925. When we hit 1925, we literally just hit that price and disappeared from it. Just went away. So right at 1205, if you were watching, if you were ready at 1205, where's 1205? Right here. It was very quick to be buying this kind of basing number. I mean, you really did have about half an hour, but that was from this hammer to this price where it actually touched 1925 here. That would have been a really nice quick move. But why would you have been exiting here other than just prior resistance on the, from 2 or so, about a little more than 2 hours earlier. It wasn't moving into it. It was moving from this pivot, but didn't get down to this pivot, to this zone. It hadn't taken out a low yet. I mean, it technically took out this low, but I mean, the only thing really saying get out here anywhere in this candle was you got a couple bearish candles in a row. And yeah, that's all I'm really seeing here. Obviously, seeing this as a hammer after the fact, sure. And this being somewhat of a hammer and then having a bearish engulfing says, okay, stay in it. But if you had just held through all of this and realized, okay, it's not going lower, let me tighten my stop, and then you get stepped out, let's say here at 120. So that would have been getting in, what did I say, like getting in here. Like let's say you got in right at 9 by 8, and you held over here to 120. Okay, yeah, after 120, then yeah, you wouldn't really have any space to move your stop. You would have probably been scalping a little bit to get out at 10 just prior to that, because I don't know where you would have been actually stopped. You probably would have been stopped here if you moved your stop. So that would have been like a 9 by 8 setup here. And if you didn't get out at like 12 because of previous resistance, you held back through this and probably scalped out at 10, if not losing an R or getting out for break even over here at like 9 or back down at like 8. Possibly. Just because it didn't have a strong bearish move. It had a strong, hold, below the 1925 price. But that was about it there. We ran back up into that price here, held it pretty well right in here. So that was another place that some bears could have been looking to get in. Let's see, that was 135, 145, 135, 145. Yeah, not really holding. It just continued to move down. So it didn't really base here, didn't really pause at this price, a little bit, but yeah, not really enough to say, oh, I'm going strongly bearish here, And you don't really even get much follow through bearish. Just this candle did. So it makes sense that somebody could have been shorting here, but then immediately know they're wrong and try to get out. And possibly could have gotten out for break even because it did retrace a little bit as it went sideways. But just didn't really get going. The put didn't continue up higher. So, and then the run up at the end of the day, looking back at 1950 calls, would have been actually a little bit harder to get 10 by 9 right in here. So it was 150, 155. And that would have been, right in here. So similar to what I did the other day. What was it? Tuesday or Wednesday? Whatever day it was. Over here. Getting in a similar price here to here. I know that I'm like way far out. Okay, what I'm pointing at, and you go back and watch Tuesday, but I was getting in like over here, and then should have been getting out here at 17. Done 10 by 9, getting out at 17. It looks like you could have done 10 by 9 right in here somewhere, and then gotten out at 17 and still missed this bigger move up here. But you're not going to get all of them at the high. Oops. So, yeah, it actually hit 17 at the first run up. So, yeah, getting in potentially 10 by 9 here. It goes up, goes sideways, pulls back a little bit, little loss curve, and then continues on up to 17. Comes back bigger. And if this is the point, it's like, okay, if you miss 17, if it didn't fill at 17, which there's no guarantee that it did. But if you miss getting filled at 17, probably would have tightened up your stop like to 12, like right under that candle, thinking, okay, this will be small pullback, it'll be fine. And again, trailed out at like 12 for like 2 hours. Instead of just sitting back and like, okay, this thing, it's breaking out, could have a bigger rally. That's the objective way to look at it. It didn't fill me at 17. I'm going to move that up to like 20, and I'm going to hold my stop down here at like 10. Because this has, really a good ways to go. So another way to think about it. I wasn't in this one. I wasn't even watching. I was busy with other stuff today. So not busy, just chose to make other priorities. So Yeah, had a good day overall. But learned some stuff today, and looking at how this strength looks like it's coming in here. So I've been talking mostly about looking like this could continue higher, and then we'd be up in this channel. Let's just talk through a little bit. If we do gap down, if we take out this candle and these candles and get below the 21, it's much further to go down. But I think that'd be a quick way back down to the bottom edge of this channel into probably about 1800 at this point. 1800, 1815, easy lower targets if we take out this candle. This is a really nice dropping volume here, which tells me this is a bit of just like a flag or just resting. Again, I'm still not really seeing a triangle here. I was still trying to look at other time frames to try and see, okay, is there something there in hourly? It's just not, I'm not really seeing it. I'm mostly just seeing a channel here, just a sideways clean channel that you've put in some just sideways like that and like that. That was horribly drawn. Oh boy, still not straight. Hey, that was a little better. Like that and like that with a midpoint at like 1925. So we've been holding right around, we talked about 1260 in here. That's your resistance. 1900 pretty much has been your support. It's, ran up, ran down, ran up, ran down, didn't quite get up, came back down, ran up. So it's just gone back and forth in this area. Have we ever done that before? Yeah, I think so. I think we did something like that over here. Oh yeah, right here. Up and down and up and down and up. This was like 2 days of just sideways, This is just 3 days of sideways, more or less sideways. And this one went to a breakout. This one, we'll see tomorrow if it breaks out. But I think the stage is really well set that it can, and it can actually continue. Like I said, look to get in after it gaps up. If it gaps up on a little bit of a pullback, could be really small. You could set this up as like a bracket trade where you're getting in above here. So it's a stop limit to get in above about 1960, and your stop is down here around like 1860. Just easy numbers then. 1960 by 1860. If it breaks out and gets above that price, it pulls back to 1960, you're in bullish. If instead it gaps down and starts to go lower, you can set it up to do a 1860 stop limit, and your stop is up at 1960, but you wanted to find your risk. That's a clean $100 risk. You could probably tighten it up because these candles are less than 100. You could probably do 1960 by 1880 instead. So that's about an $80. It is an $80 risk. So, defining a risk around something like this, and if we can get going bullish, I don't know that we'll take out the all-time high, but we've got room to go up to this part of the channel. And if we do that over the next couple weeks, we're pushing into the 2100s. That would be more than 2 times this risk, I think. I'm not doing the math right now in my head. 1960 plus another 80 is 2040. Plus another 80 is 2120. So yeah, 2120 then would be about 2. Okay, so it is like 2R to get up there. And that's just looking at the stock. Going lower, you get about a 1R to you get down here, because you're pretty much about half the channel here, just about close. And if we were to go lower and contend with this low, that'd be 2 or 3, or at least like 2.5 or something, or lower. That's just looking at the stock. I think we'll have other signals before then to suggest option plays to get in and get out. I'll be watching for those. But for right now, yeah, we've got expiration Friday. Tomorrow, we'll see if the 1950 call is going to be in the money if we gap up. So I would be looking probably around 2000 again, maybe 1990. 1990, that one's Because if we get a gap up, we could open up around 10. See if we pull back a little bit to like 5, hold some level in here with the 1990. Oh, something I thought was interesting. When I was trying to find, so I was trying to find an option that I thought would be right around $10, holding a base around $10. So I put in 1875 because I'm always looking at the 25, 50, 75 zeros, you know, and it couldn't find it. I'm like, why can't it find it? I actually went over and looked at the option chain. There's this 1870 and there's an 1880, but there's not an 1875. I didn't realize I was looking at all. Okay, this is being really slow right now. Too far. Yeah. So you've got a whole range in here where there's like increments of 10, but you had increments of 250 over here and increments of 250 over here, but there's increments of 10 right here. I'm just not used to seeing that. I'm used to having increments of 250 all the time. Like, look at this. Oh, there's another one. That's interesting. There's another set of it here. I wonder why they did that. I mean, there's not a lot of volume in these. Where is it? I thought I had the volume. I thought I could scroll over to the right. Let me see. Is it going to scroll? No, it's not working. Yeah, I thought I had volume over here somewhere, but I'm not seeing it right now. But anyway, I just thought that was interesting. And so I don't know that we're going to get back down. I mean, we'll get back into 1880 if we gap down and trade lower. We'll get there. But you're going to be stuck with options every day, which is going to help the volume increase on those. But I don't know that we need to be trading options up in the high 2000s tomorrow on the call side, because that's a long way to go. So, you know, if we go up, I think 1990, 1980, 1975 strikes would be good ones to watch. But if we go lower, we'll have to watch out to just go every 10. Because I think it's too late for market makers to even make more options. I think they do that the week prior. I think like the Thursday or something prior to the next week's expiration, something like that. But anyway, they're not there. So I couldn't look up at 1875. I looked at 1880, and that's the one we looked at earlier. I know I just opened up at 1870 just to show you. This was much more, I'm sorry, not much more expensive. This was cheaper here. But yeah, I originally was looking for a price that was holding right around 10. And so I was looking at 1875. That didn't exist. 1880, 1890. You know, just trying to figure out, okay, where could you have found something that was right at 10? And this was just above. So that's why I went out to 1880, because I don't think there was 1885 either. Right? Isn't that what we just saw? 18. Why am I doing this? There we go. Yeah, so there's every 10 through here. So you're kind of stuck. A little bit stuck today. And I didn't expect to see kind of just the options work out that way. So there you go. All right, hope this helps. This is Just AMZN. Thanks.